You're going to want to sit down for this. Bank of America, one of the biggest and most powerful banks on the planet, just dropped an absolute bombshell. They've issued a warning, predicting that the price of silver could rocket to an incredible 309 per ounce by the end of 2026. Now, this isn't some wild guess. It's a detailed forecast based on market forces they believe are about to collide and trigger a historic price explosion. We've got our hands on the report, and you need to hear exactly why this Wall Street giant thinks the silver market is on the verge of a complete and total reset. Right now, in early March 2026, silver has been on a wild ride, trading in the low 80s after a fiery start to the year. If you're looking at the daily charts, it probably feels like chaos. The market has shown crypto-like volatility, with huge swings testing the nerves of even the most experienced traders. We all saw the brutal sell-off in late January that was followed by a whiplash-inducing recovery. But while most people are glued to that short-term drama, Bank of America is looking past the noise. They're telling us to look at the horizon, and they've drawn a map that could lead to a price explosion that makes today's volatility look like a flat line. They argue that the recent sell-off was just the market taking a breath before the next massive leg up. Their report suggests we're moving out of an old market and into a new era, one driven by huge structural changes. The main takeaway? The price you see today might be a total illusion, completely disconnected from the reality brewing just beneath the surface. Wall Street is sending a signal that the age of cheap silver could be about to end violently. So how on earth does a bank like Bank of America come up with a number like $309? It's not a lottery ticket number. The forecast, written by their head of metals research, Michael Widmer, is built on three powerful pillars that together create the perfect recipe for a historic repricing. Let's dig into them. First and most important is the gold to silver ratio. If you're new to this, it's just how many ounces of silver it takes to buy 1 ounce of gold. Think of it as the original crypto exchange rate, but for real money. This ratio goes up and down, but it tends to snap back to its historical average. Right now, it's way out of whack. Bank of America's analysis lays out two scenarios where this ratio comes crashing back to reality. Scenario 1. If the ratio just goes back to its low from 2011, which was 32 to 1, that would put the silver price around 135 an ounce. That alone is a monster gain from here. But it's scenario 2 that's making headlines. If the market truly panics and the ratio gets squeezed down to the insane levels we saw during the Hunt brothers era in 1980, a ratio of 14 to 1, well, the math spits out a silver price of 309 per ounce. Widmer's team isn't saying this is guaranteed, but they're showing what is mathematically possible if history rhymes and a real physical squeeze happens. They say a panic for physical delivery could be the trigger, something the market was already getting nervous about back in late 2025. The second pillar is something we've been talking about for a while, but it's now at a crisis point: the massive structural supply deficit. This isn't a theory anymore. It's a fact. For 5 straight years, the world has burned through more silver than it has mined. We are now in the 6th year of this deficit, and they're projecting a shortfall of another 67 million ounces for 2026. Let's put that in perspective. The total shortfall since 2021 is now over 820 million ounces. That's more than an entire year of global mine production that has just vanished. This isn't a temporary problem. It's a structural breakdown. Mines can't keep up. The world's total silver supply is only expected to grow by a tiny 1.5% in 2026, which is nowhere near enough. We're even seeing the world's biggest silver miner, Fresnillo, cutting its production forecast for this year. It's basic supply and demand. When something this essential becomes this scarce, the price doesn't just go up, it can explode. The third and final pillar is the freight train of industrial demand. Gold sits in a vault, but silver gets used up in record amounts. Industrial use is smashing records and shows no sign of slowing down, all thanks to the green energy and tech revolutions. Two sectors are leading the charge: solar and electric vehicles. The solar panel industry is eating silver for breakfast. In 2014, solar panels made up just 11% of industrial silver demand. By 2024, that had jumped to 29%. As the world sprints toward clean energy, that demand is only going to keep growing exponentially. At the exact same time, the EV revolution is creating another unstoppable wave of demand. Your average EV uses between 67% and 79% more silver than a gas-powered car. It's critical for batteries, electronics, and charging stations. By 2027, EVs are expected to use more silver than the entire traditional car industry. And here's the kicker: this demand doesn't really care about price. These industries have no good substitute for silver, so whether it's $80 or $280, they have to pay up. If you're getting value from this breakdown and you want to stay on top of this story as it unfolds, do yourself a favor: subscribe and ring that notification bell. We're going to be tracking this every step of the way, and you won't want to miss what happens next. Now, is $309 silver a sure thing? Of course not. It's smart to balance the excitement with a healthy dose of reality and look at the risks. The road to triple-digit silver, if it happens, will be a bumpy one. First, you can't ignore silver's insane volatility. As we saw earlier this year, the price can drop and drop fast. A 15-25 haircut can happen in just a few days, usually when bad economic news hits, the biggest risk. A major global recession. Since more than half of all silver is used in industry, a big economic slowdown would hit demand hard and definitely put the brakes on the price. Second, there's the Federal Reserve. We saw back in January what can happen when a more aggressive Fed chair is appointed. The US dollar shot up and silver got hammered. If the Fed has to keep interest rates high to fight off inflation, it could make the dollar stronger and pull money away from assets like precious metals that don't pay interest. Finally, that eye-popping $309 number really depends on gold also making a huge move to the $5,000 to $6,000 range that Bank of America is targeting. If gold fizzles out, the silver rocket loses a lot of its fuel, and let's not forget the paper market, where big players have a long history of dumping contracts to stop rallies in their tracks. So what's the bottom line from Bank of America's shocking report? The key isn't just the $309 number, as fun as it is to think about. It's the fact that one of Wall Street's most powerful institutions is now publicly confirming the game-changing forces at play in the silver market. For years, people who believed in silver have been pointing to the supply deficit and the tsunami of industrial demand. They were often dismissed. Now, one of the biggest banks in the world is not only agreeing with them but is putting a number on it, a number that is impossible to ignore. Whether silver ends up at $309, $150, or somewhere else by the end of 2026, the message from the financial establishment is clear. The fundamentals for this market are stronger than they've been in decades. When you have a multi-year supply crisis colliding with an unstoppable, tech-driven demand boom, you have an explosive situation. Bank of America's report isn't a prediction. It's a warning shot, a signal that the laws of supply and demand are about to reassert themselves in a very big way. What do you think? Is Bank of America right, or is this just Wall Street hype trying to cook up a buying frenzy? Let me know your price target in the comments below.